Good morning, Asia. The crypto world is holding its breath as Bitcoin's seemingly calm waters mask a storm of anticipation brewing beneath the surface. With the U.S. CPI data and the Fed's September meeting looming, the market is poised on a knife's edge, and everyone's wondering, will the $7 trillion sitting on the sidelines flood into crypto when volatility returns? But here's where it gets controversial. While some see a rate cut as a done deal, others argue it's not the cut itself, but the potential shift of liquidity into Bitcoin, Ethereum, and riskier assets that could truly ignite the market. And this is the part most people miss. The real question isn't if the Fed will cut rates, but how the market will react when it does. Welcome to the Asia Morning Briefing, your daily dose of market insights and crypto news. As we navigate the complexities of today's financial landscape, Bitcoin finds itself hovering around $111,000, with volatility compressed to levels not seen in months. This eerie calm, however, is often the precursor to significant market movements. Traders are keenly awaiting two major events: the September U.S. inflation data and the Federal Reserve's rate decision a week later. These events could be the catalysts that break the current lull and set the stage for the next big move in digital assets. Prediction markets are overwhelmingly betting on a rate cut, with polymarket bettors assigning an 82% chance of a 25 basis point reduction on September 17th. Interestingly, October's expectations are more divided, with nearly equal probabilities for another cut or a pause. This divergence suggests that while volatility is currently absent, it's unlikely to remain so for long. As Gracie Lin, CEO of OKX Singapore, aptly puts it, markets often look calm just before they move. With U.S. inflation data and the Fed's rate decision on the horizon, this quiet period is setting the stage for the next decisive move. But here's the twist. If the Fed does cut rates, the opportunity cost of holding cash increases, potentially driving investors to seek higher returns in crypto. Enflux, a pivot market maker, highlights that the real debate is not about the rate cut itself, but whether sidelined cash will rotate into digital assets like Bitcoin and Ethereum. This shift could reignite volatility and fuel the next wave of crypto market activity. Market movements. Bitcoin, trading between $110,812 and $113,237, BTC has seen slight intraday dips, reflecting short-term volatility amid shifting investor sentiment. Ethereum, ETH, is modestly up, trading between $4,279 and $4,379, indicating steady demand and renewed investor interest, though ETF flows remain modest. Gold, rallying to record highs. Gold is benefiting from expectations of Fed rate cuts, a weakening U.S. dollar, and safe haven demand. Nikkei 225. Asia Pacific stocks opened higher, with Japan's Nikkei 225 up 0.2%, as investors await China's August inflation data. SP 500. U.S. stocks closed at record highs, with the SP 500 up 0.27% to 6,512.61, despite a significant payroll revision. Elsewhere in crypto, OpenSea teases its C token with the final phase of rewards amid its app launch. A California man is sentenced in a $36.9 million crypto scam tied to the infamous Huan Group. Collector Crypt drives $150 million in randomized Pokemon card trades, boosting the card's token. Controversial question. With the Fed's rate decision looming, do you think a cut will spark a significant shift of liquidity into crypto? Or will the market react differently? Share your thoughts in the comments. Let's spark a debate. AI disclaimer. Parts of this article were crafted with the help of AI tools and reviewed by our editorial team to ensure accuracy and adherence to our standards. For more details, see our full AI policy.